Hey everyone, this is Kirk here again at Option Alpha. It is Tuesday, March 22nd. Just wanted to do a members only video here. So this is strictly for our members, our community. Don't want anybody else to see it. So please don't share this with everyone else. It is protected, and so it only is going to be accessed for our members. But I want to go over kind of my thoughts for the coming month here and just kind of give you guys a little bit of a look at what I'm looking at as far as the markets are concerned, as far as our trades are concerned. Now, I am going to show all of the trades for all three portfolios that we have on right now. I don't think that there's any problem with that. If you are a member of one and not the other, you just get a little bit of a glimpse into the other strategies and what we kind of do and where we kind of trade. I don't have the income report for February done just yet. I am making some tweaks to the way that I disclose the income. Mainly, I'm going to start using a simple model portfolio. It's been really requested, and a lot of people have kind of convinced me to go that route. I used to do that way back when, but have since changed over, and now I think I'm going to change back. So anyway, so that's why it's taking a little bit long, just trying to redo all the data and use this new model portfolio. Again, it's just a model, it's just a baseline just to give people an idea of what to do with their trades. It was a really good March for us, or it was a really good March for us. Everything expired completely worthless, completely profitable. Nothing was in the red. No trades at a loss, no trades closed early. So again, very, very profitable for us. And we just continue to move on here. Namely, I just want to highlight two trades that we had on the NDX and these credit spreads above the market. So these are just credit spreads for those of you who are not part of this portfolio, but you can see that we actually entered these trades really, and I'll just kind of go back here on the chart, really when the market was rallying right to our area. So it looked like we were in the face of just another coming rally. And as you know, if the market goes beyond our strike prices, we would actually lose money. But it was really good. We thought that the market was really overbought. It was showing signs of weakness. The rallies just weren't that strong, just a little bit higher every day. It seemed just kind of slowly marching higher. And then as the market fell away from us into expiration, then we really got some good trading done. So those really quickly decayed and were profitable. So from here, I think, and I just want to use the Russell as my kind of guideline here. And again, here you can see we already have a trade on the SP, or this is the SPY here, and this is our credit spread way below the market. So this is very, very safe. Got that on some high volatility. Let me go through the trades here real quick before I go to the Russell. The Russell, we have a credit spread at 880 is our first strike. That is well above the market. We actually entered it below the market, or when the market was down here in the middle part of March when the VIX was spiking higher. So even though the markets rallied towards our position, the VIX falling really helped our position and started to really decay that position. So it ended up being a really good position. It just goes to show you that even if the market is moving against your position, going against your position, if you have call spread above the market, if you enter that position with high volatility, you get some really good time decay. The other two positions that we do have open right now, and these are just the naked puts and calls portfolio here. It's the 100 strike put on the DIA. Again, we got that on some high volatility, some high VIX. So that's a really good trade. Already seen pretty much already worthless at this point. And then on SPY, we have a 105 put, again, well below the market. You can see on these naked puts and calls how far we can get from the market because we're only trading one side. So it really reduces our risk. As far as iron condors, we're hoping to enter a trade maybe tonight, if not tomorrow sometime is when we'd like to get into that trade. I want to make sure that the indexes are in a little bit of a tight range for the iron condors, as you know, so we have to get a little bit closer to the market. So I'd like to see the indexes kind of sell off just a little bit more before we really bracket the market for the rest of the month. So iron condor, folks, there will be a trade coming out soon. Okay, so I have to get moving on this video before YouTube cuts me off with its time limit here. So what I really want to look at is the Russell tonight real quick, and then we're going to take a look at crude oil. The Russell has been a pretty steady index as far as following some trend lines. You can see that back in February, it followed this intraday trend line pretty much all of February until it started breaking down on the 22nd. So it's a really good index to follow for trend lines, to look for pattern breakouts. You can see that we had this pattern drawn well before the market actually broke out, this kind of wedge pattern that the market was making back in March. Now that we've broken out though, I think the Russell is still going to see a little bit of upside potential, and I drew this this morning here on our post, but I think the market still has some room, and this is just what I think is going to be just a very simple retracement rally. It's very natural for the market to experience a hard sell-off and then retrace some of that move before kind of settling into a range or starting to trade lower. You can look back here when the market broke out back on the 22nd of February, it fell hard, and then again it rebounded hard. It didn't quite make a full retracement at that point, but it rebounded hard first, and then it settled into this nice trading range. So I think that's what we're going to see on the Russell, and that's why for those iron condor traders, I want to see the market kind of move lower first before I start to bracket off the market with an iron condor trade. Okay, the last thing I wanted to look at here tonight is crude oil. Crude oil's been a pretty interesting chart here. This is just a price level I had drawn. Crude oil's been a pretty interesting chart for the last couple days and the last couple weeks with all this, both Libya and everything in Japan. It's been a really tough trade for those of you who trade it, but it is starting to sway the equity markets. And I think if we get a little bit more upside potential in crude, it could really drive the indexes lower. But as with anything, even with all of this market craziness, crude still is following some very basic technical analysis tools that we have, namely this simple trend line that we've drawn from November through March. You can see that it hit its head or hit resistance a couple times on this line. Once it broke out of this line, it's now bouncing off of it on a clean retracement higher. So again, even though there's some major market movers with Libya and the oil crisis and Japan and their demand falling, crude has still followed a lot of these same principles that we continue on with. So the other thing that I wanted to note on crude is that it is following these Fibonacci retracements very, very good here. You can see it's hitting this upper Fibonacci retracement here, has moved down lower. Now it's hitting its head against that level once again. So if crude does start to break out, it could be in for a very quick and violent move higher. If we don't see a breakout, then I think it could slowly start to melt lower. I think the absolute bottom here over the short term, so maybe April, as we get into May here, is probably no less than around $90. This major Fibonacci here is going to be pretty strong going forward, and also has been a pretty good area of resistance in the past, so now it's going to act as a good area of support. So again, I hope everyone enjoyed this. As always, we are trying to trade with as minimal risk as possible, trying to enter really good trades, being selective in our trades. Again, we're not trying to day trade, or we don't want to make a lot of trades. We want to make a couple really good trades. And I think we've done a good job of that. As you can see, our performance has been really well with these portfolios going forward. So as always, if you have any questions or comments, please email me, and happy trading.